Welcome to the Plus3 stock and commodity forecasting show. This is the latest episode. We are live here Monday morning at about 8:30 on May 24th. My name is Ben Maldonado. Barry Hedoraki is here with us as always. Good morning, Barry. How you doing?
Good morning. Doing pretty well.
Excellent. No
So
lack
what's that?
of volatility.
Yeah, really. And what's that chart you got up there?
The poster child for volatility and excess, I call it Bitcoin. So Bitcoin was very active over the weekend and last week. We talked about this a few weeks ago. You and I were saying how this area up here where it could not get above resistance, this geometric support resistance line in the 60,000 area, couldn't get above it. It was vulnerable because not only were you at that resistance, but you were also making a lower high. And what followed is generally what probabilities favor, right? When you have that setup, it doesn't happen often, but when you get that setup, it's a high probability success trade. I mean, what do you see on Bitcoin these days?
Well, that breakdown is right. We made the high. We had that three drives that we talked about, and the market came down, and the level you were pointing to was where the first counter trend finished, right? And that's usually the best place to, trade into a short position. And from the Elliott side, it looks like a 1-2, and 3 is what would ensue. So I think we're in the midst of that. And I also see a small 3 waves within the third, right? I think you see that. And looks like we're going to probably consolidate here on like a fourth wave action, pretty much like the 2021. You see that action there before we went higher. And so I think we're probably going to see some of that and maybe test lower. That's definitely a possibility. Right now, it's on good support. It's on your half square. And also we have the support on the other side from 2021, earlier 2021. So it looks a little weak. It couldn't even get over your main grid point, up a little bit above 40. So that tells me it's weak.
Yeah, if we can get above this 42 area, 41.8, 42 area, it'll say, okay, things are stronger. It's trying to build a base, but below here, it's, it did find support on the half square, as you said, but it certainly looks like it wants to test down here, which is 24,000.
Yeah, I wouldn't be surprised if it doesn't. If it goes there, it should. It looks that way.
Yeah, probabilities certainly favor the downside from here. Hopefully, if you're trading cryptos, you saw what we were discussing and at least got off margin or took action, protective action, because that's the idea. That's what, we don't know for certain what's going to happen at these points, but we do have probabilities in our favor. And that's the definition of an edge, which we try to always trade with an edge, because if you're not trading with an edge, you're generally going in worse than a coin flip, and long term that will drain your trading account. There's no question about it. Why don't we pass it over to you, Barry? Let's anything else on Bitcoin before we leave this wonder child?
Maybe you want to cover the main support levels below your mains and the halves.
Yeah, so the half, I think you got to watch this level in here, which is around 33,000. 33,000 is probably the best number. If we get stuck below that, we're definitely going down this way. The odds favor it in a high probability manner, which is around 24,000. If we lose 24,000, the next level down is around 15,000. And by the way, in the 15 to 12,000 range, based on the high that came in and based on how Bitcoin corrects, that's an 80% correction, which, believe it or not, is pretty standard for Bitcoin. So if you're thinking about buying the dip, either look to buy at one of these support levels and you know where your stop is if you get stuck under, or sit on your hands until we get to that near 80% level in the support around 15,000. Not saying that's going to be the outcome, just saying if you look back at the patterns of the spikes on this thing and the corrections, this level is definitely in the realm of possibilities.
All right, very good.
Let's switch over to Barry, who's going to give you a look at the major markets in his own unique way, and we'll talk about them and see what the charts tell us. What are you seeing, Barry?
Well, I think we left off pretty much on the screen last time that we spoke, and the focus then was this 45-day run up into the high. We wanted to see, well, we were anticipating some kind of a correction following this, not just because of the 45-day run, but also we had other cycle timing cycles that were expiring around this high. And we did get a pullback. And I think the last show we talked about, having to hold as long as we're below the 4205 area up here, that market's going to be in a weaker position, a little bit softer. And the idea that we really need to get a close, not just the close, but the market getting sort of stuck below 4115 for it to signal a deeper correction. And if we do that, we were looking at around 3850 to be major support to the downside. So that's kind of where we left off. And last couple of weeks, we basically consolidated. We made higher lows, and with the flat top, ascending triangle. So it makes sense that we go up and test this line again and make a decision up there. That's kind of what I have for the S&P.
Yeah, that timing line was real good, because look at the reaction you got off of it, a pretty sharp move down.
Mm-hmm.
So the timing line, I think, was really good, which, as you said, coincided with our cycle work. The other interesting observation I have is the price action since that sharp bottom has been really choppy, really sloppy, which is a changing character from sort of the run up where, we'd have the sharp downs and then we'd have a sharp up right away.
Right, exactly, like here. All of these.
Mm-hmm.
Mm-hmm.
It didn't take long to make a new high, and here we've been, chopping around here for a couple of weeks. Be interesting to see if we can take out that high, or if we make a lower high, we may have a similar setup to the Bitcoin that we talked about earlier, which is, you got that lower high, and then you could potentially have a fast moving wave down coming. Yeah,
that's correct. And I think the key levels we're watching, that should tell us which way we're going to swing off of this. So 4205 to the upside, that's a 50% of the square. Mm-hmm. And to the downside, we're getting stalled below 4115 would signal that we're going to continue down into the 3850 area at least. So that's sort of the swing, and we're kind of in a pivot point in the S&P, like we talked about last couple of times. You want to add anything to that, Ben?
Only the other thing you talked about a couple of weeks back we got to watch out for. A classic move by these guys is false breaks. So why don't you talk about the potential for a false break there as well?
Well, and I remember us talking about this. We were looking at this to be a false break at the time, and which it was, because fast moves come off of false breaks. And you can see how we had this slow, sort of a sloppy high, and then we had a quick false break, came down. Now the idea is that, that was done and we need to roll over, but S&P is not that innocent. So it's possible that we go up and do a false break up here. And then, we really have to watch that, because anything above 4205, we have to watch it with a clear eye and to see what the next phase would be. But long as we're below that 4205, I feel like it's on a weak leg. Now, false breaks, here's another one. This is back in February. you can see one day, and from there we corrected fairly hard. And S&P, false breaks everywhere. So, there's a false break here. We had a high, quick move up, turn around, false break. High, quick break to the upside, immediate reversal. So these things are, and of course, last February we had the false break up here before we turned down in a big way, right?
Yep.
So those are false breaks. That's all I have for the S&P. Basically, we have the levels, we had timings in place, and we've been covering that the last few sessions. So anything else you want to add to that? We can.
No, what's the next market you want to look at?
Well, let's look at your favorite. Let's look at gold.
Mm-hmm.
And I think we left off talking about the 50% line. We wanted to see a break above it and holding above it, and that being very bullish. And before that, earlier to that, we had this basic trend line drawn in, and we wanted it to hold above that to continue the momentum to the upside. So everything played out according to how we were seeing it. And now, and you can see even last week, that one day we had a little bit of a sell-off. It held right at the 50% line, and buyers came in. So now it's in a bullish position. Trend lines are holding. We could do a steeper trend line, but it might be a little bit premature. Either way, the key level to watch would be around 1854, 1855, right in there, or 1852. And as long as we're above that, I think it's in a bullish position.
Yeah, I agree with you. I think gold is set to move very strongly. Just an observation from watching intraday price action, any weakness is being bought aggressively. You can see the morning, it can be down 10, and then it ends the day up 5. Down 15, it ends up flat. Somebody with big pocket and deep pockets and big money is buying any of the intraday dips in this thing. So it is bid.
Right. And we broke this down channel. We had it for a few months. We broke out right there. Quick little retest and moved higher. So this is all bullish for now, especially above this 1852 level. That's all I got there.
Where do you see it going price wise on a move higher?
Upside, the full square is what to be expected, and that's around 2034.
Mm-hmm.
And clearly, I think at a minimum, if we hold above this level, the 50 halfway point, we ought to go and take out these highs from last year, late last year, around 1960.
Mm-hmm.
Yeah. And if we do that, then it's not that much of a stretch to get up to about 2030, somewhere in there.
Yeah, it looks bullish. Gold looks good.
Yeah, it looks good. And let's see let's look at crude.
Yeah, what's your view on crude?
Well, I think we left it off pretty much on the trend line. We said, long as we're above the trend line, it's in a bullish position. And we were also looking at this square. Yeah. Mm-hmm. So here the 50% is around $56, and the upper end of the square would be 78, 79. So the idea was that we wanted it to hold above the 50% level, and long as it's above that it's in a bullish position, and that's worked out more or less. Now it broke the trend line that we had it put in last week, but it really didn't break down. So momentum, we kind of went into a sloppy fourth wave type of action, but it's bullish because we're making higher lows, and sort of like in gold, these lows are getting bought up. And it's holding above a key level here around $60. So I think structurally 60 looks fairly good, and buyers came in. I think it's still bullish. I wouldn't be selling this at a minimum. So yeah.
In my notes, I have bullish chop. It's been chopping, but it's bullish. It's being bought up. They rated, the bears took it down hard, but it couldn't break that important support in that, 6150 area.
Yeah.
So I think it's still bullish.
And at the moment, it's caught between these this 1/8 segment. It's about, I don't know, $6 or $7 range here. But it's holding in a bullish way, right? It's holding above these old consolidations down here. So,
and you're making higher lows, which is always a good sign.
Exactly. So this is all bullish, and once we take this out, then I think upper 70s are within reach. Now, there is a ABCD that expires that we have a target around 70, so we'll get there first and see what happens. But looking at this long, a couple of months here, this is bullish, right? Because it's sort of like a basing area midway. So I think the entire pattern is fairly bullish, and we have some numbers to watch. Yeah. Anything else to add to that?
Nope, I agree with that.
Take a look at bonds. This is where we left off last week, and we've been really focused on this 144-degree level off the high up here last May, and the key we've been watching, key level is this around 55.20, and the idea being, long as we hold above it, we're up. At least I'm looking at it in a through a bullish lens. And if we get below this 55.20 area, I would think we have a lot more to go then. So this is a key make or break sort of level. And we came back and tested this breakout over here last year. So this is a significant level and area in time and price. Price being the 55.20 area, and if we hold it, I think we can go higher and at least test the 164 level, which is the 50% of that square. Else much lower, but let's see. Bonds are, they sort of get stuck in these ranges at times, so we're in one of those ranges, and the bottom level of that would be 55.20 to watch. Upside, we have room to run.
I was looking at it. I was seeing it as like sort of the inverse of crude, where you have like a bearish chop. But as long as we're holding that, that 55.25, I think you said level, you can't be bearish, because that's an important support resistance spot, that 144.
Exactly. And the fact that we're holding above it, we're consolidating on top, not consolidating on the bottom, right? Like over here, we can see how we broke down off the highs, and we were consolidating below the line level, and that's usually bearish. But we did it for like 2-3 months, so that's the thing. It can hang out there for a while, but we know the balance is to the downside. So
it wears you out when it does that, doesn't it?
Yeah, it wears you out. So unless you have these levels, it's easy to sort of get tangled up in it, because if you don't have any way to frame the price action, it gets it's hard to tell.
The interesting thing too, Barry, when we've had this experience, is not only does it tangle you up if you get involved, but you also get distracted and say, oh, it's not, I don't need to look at that, it's not doing anything, and then you miss the move when it happens
all the time. So that's why we review every weekend. And we talk about it every morning. So
right.
I think it's really important to stay on top of it and see what the price is doing. So yeah, that's all I have for bonds. I think it's, as long as we're above 55.20, it's in a bullish position. So we'll continue to watch that. And we know it takes time before it, makes this trending part, get into the trending phase. So we'll wait, see
what do you think about the dollar? A lot of people talking about the dollar and the reserve currency status of the dollar, and it's going to crash and this and that. What are you seeing in the dollar?
Well, it looks a little weak. A couple of weeks ago, we talked about the 50% level here, and we always reference to a level, so it's easy to remember, and you guys can always duplicate these lines. So,
and this chart is the chart of the euro. Is that the euro?
This is the euro, and we talked about this 50% level last few times, and that level happens to be around 2060. And we've been talking about how if we can get above it and hold above it. And we use that phrase a lot. We say get above, hold above, or get under and get stuck below.
Mhm.
When we talk about that, this is what we're talking about. You can see how price broke out to the upside and came back to test the 50% line. And it held that. So if it holds it, it's usually bullish. And this is what happened on this leg. We talked about it holding above 50, and it did eventually after it broke out. And now it's in a bullish position. We could go and test these highs over here from January, or even to go higher. So 24.16 seems to be the upside target, which is just one full square of 72. The halfway point got tested fairly well, so I think we're in good shape there. So dollar, it's going to probably get a little weaker before stronger, the way it looks. And I know you watch the dollar also. So what do you have anything to add to this?
I know, I agree with you. I think, the fundamental macro case for a weaker dollar is there, and the price action on the charts is confirming that. So
Right.
it's kind of tough to be a dollar bull right now.
Right. And also going off the low last year, you can see we came back to test that 144 level here also. And I remember us watching this area because, we could get stuck below and sell off, but we didn't. We held above the line, broke out, check back. So we're free. And we pretty much end up in the same level, a little above the highs. Because that's one full square here.
Mhm.
Right there. So that's pretty much the range, the possibility, right?
Sure.
The potential to get up there. And so see, we're pretty much in line. It's a very nice chart. And I think that the direction is upside for now in a weak dollar. That's all I have for that. Keep it simple and straight. Well, when the market's moving, there's not much to talk about. So it's trending. That's it until it stops trending. So, and this is trending. And
you just find your levels and see how it acts at the important levels. And then it's decision time.
Exactly. So that's pretty much all I have for the euro.
Anything else you got? Any other markets you want to look at before you throw it back to me?
No, that's it. You can cover the commodities, and we'll go through that because we need time for that also. Let's take
Excellent.
All right. Very good.
So here's a gold monthly chart. I wanted to add to what Barry was showing, talking about him being bullish on gold. I'm very bullish on gold. Of all the commodities, I think gold is in the strongest position right now. But what I wanted to show you, this is a monthly chart. Back in 2008, gold went up, made a high, had a 7-month pullback, and then launched to new all-time highs here. What we've just had is gold made a new all-time high, had a 7-month pullback, and we've begun moving higher again. Analogs are great while they work, and when they do work, it seems like magic. I just use it to look at, what's the possibility? Where are we potentially in the move? And if we are doing a similar analog and the similar consolidation, the point is that the consolidation is done and because we've really moved out of this consolidation with speed, and the intraday buying that I've seen happening in the charts, and the support and resistance that we're taking out and the way we're moving, it looks like gold is ready to move in a serious manner like this. So that's just another tidbit on gold that I wanted to throw out and have everybody understand. Another one that I wanted to look at is silver. Let me find the silver chart here. Let's go up here, silver. So silver, this is a monthly on silver. Silver is doing something similar to an analog in 2010. We had a move up, a spike low that cleaned out the stops here below previous lows, and then we took off and went higher. If you look at what's going on here, and look here, when we went up, we made a high, pulled back, made a slightly higher high, consolidated, and then the launch happened. Had a move up, clean out lows, made a high, pulled back, slightly higher high, false break, cleaned out some stops up there. We've had a consolidation triangle, broke to the upside. So it's doing a similar analog to this 2009, 2010 time frame, which led to the all-time highs in silver. We break through this 30 level, 29, 30 level. It's off to the races in silver. And those are a couple analogs that I wanted to share that I picked up in my work this weekend. Another one that I wanted to show that I think is really bullish and in a good position this week is coffee. As Barry showed with gold, when it pulled back right to support and then took off, or any commodity or any stock or any market you're watching, when you see that sort of move and it holds and it reacts strongly off of it, it's a very bullish sign. Coffee's in a good position. There's support resistance in the 150 area right now. Once we get above that, if we hold that area and we keep staying higher than that area, we're in a very bullish position in coffee. Let's see, what was the other one I had up here for you guys? Beans. Beans is not the one I want to show you because the grains are not in a position where I think they're ready to move yet. The grains are in the middle of correcting. They're very bullish longer term, but I don't think the corrections are done there. We've been doing mostly corrections in time and not price. So I think staying out of the grains for now if you're not in, or holding your longs if you are, and watching support levels is probably the way to go. But the commodities I really wanted to highlight are silver and gold this week, coffee as well. I think watch those closely because those markets appear to be in a very bullish position with a bid. There's people that want to own them, and that's what they're doing. What are you watching specifically this week, Barry?
Gold and crude and the S&P bonds. I think those are all actionable this week. Mm-hmm. They start moving. Hey, I was going to ask you, what do you make of the high in silver and gold and how copper's behaving? Have you made any connection there, or?
Yeah, I actually was looking at copper in that I was wondering if copper might be done correcting, and mm-hmm. Here's why. I had my notes when I was reviewing copper. If the market has been correcting, we had a very good high come in here from a timing standpoint and a price standpoint, and you love it when you see price and time come together. There's been a sharp move down. The interesting thing to me is we've seen a 4-hour ABCD down completed at the lows. There's monthly support at 443. If we can stay above that 443 level on a monthly, which is right about here, is that 8th square on the daily, it may be ready to start another leg higher.
Okay.
I mean, structurally, you can see it's bullish, right? Because there's the previous high, and we're still above that previous high with air. So
right. And what's that 300-degree level?
The level up here is 481.
And the one below?
And down here, we're at about 435, 434.
Got it. Okay, great.
So copper is in a bullish position. I think that high was good. We've had somewhat of a correction, and maybe we're going to see something. This is the key level to me, right, on a monthly, mm-hmm. And that's that 443 area.
Oh,
if we can
nice.
stay on top, if we can stay on top of that, you can see. Look at the low on that bar, right on it. if we can stay on top of that, it'll be ready for the next leg.
Okay, looks good.
Yep. So that's sort of the line in the sand. So that's kind of it for this week. We're trying to make these things a little shorter and just focus on a few markets that are ready to move in addition to the major markets. Hope this information is helpful. Watch the levels, keep your emotions in check. One of the biggest things for me was figuring out how to deal with FOMO. It is a killer. It will take the money out of your account faster than anything else in trading. So watch the levels, know where support and resistance is, and then trade with the odds in your favor.